How to build a balanced portfolio with index funds. Hello everyone. In today's video, we'll talk about how to build a balanced portfolio using index funds. If you're just getting started with investing or looking for a way to diversify your portfolio, this approach might work for you. First, let's quickly define what index funds are. These are investment funds that track the performance of a market index like the BSE 500 or the Nifty 50. Instead of selecting individual stocks, index funds invest in the same stocks that make up the index. This allows investors to gain exposure to a wide variety of companies and industries all in one go. Why choose index funds? One of the main reasons people choose index funds is for diversification. Since they include a broad selection of stocks, they can reduce the risk compared to investing in a few individual companies. Index funds also tend to have lower fees than actively managed funds. Over the long term, they have historically delivered competitive returns. Steps to build a balanced portfolio. Now, let's look at how you can use index funds to build a balanced portfolio. Determine your risk tolerance. Before you begin, you should understand your risk tolerance. Are you comfortable with short-term market fluctuations, or do you prefer a more stable investment approach? Your risk tolerance will help decide how much of your portfolio should be in equities versus bonds. Choose different asset classes. A balanced portfolio typically includes a mix of different asset classes. You might consider putting a portion in stock index funds like those tracking the BSE 500 for growth and another portion in bond index funds for stability. The percentage split depends on your risk tolerance. Consider sector diversification. Instead of focusing solely on broad market indices, explore sector-specific index funds. These funds track industries like technology, healthcare, or energy, etc. This approach allows you to gain targeted exposure to sectors you believe in, adding an extra layer of diversification to your portfolio and potentially capturing growth in specific industries. Review and adjust regularly. Over time, your portfolio's balance might shift due to market movements. It's important to review your investments periodically and adjust as needed to maintain your desired asset allocation. Building a balanced portfolio with index funds can be a simple and efficient way to start investing. By mixing different asset classes and staying aligned with your risk tolerance, you can create a portfolio that helps you work towards your long-term financial goals. That's it for today's video. If you found this helpful, don't forget to like, comment, and subscribe for more insights. Thanks for watching. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.